Welcome, my friends. Today, we hear the news that Vice Media files for bankruptcy. This will pave the way for the lender consortium includes Fortress Investment, Soros Fund Management and Monroe Capital to take control of the company. The consortium will provide $225 million in the form of a credit bid for most of Vice Media's assets, the company announced on Monday, along with significant liabilities. Vice filed voluntary petitions for reorganization under Chapter 11 in the U.S. Bankruptcy Court for the Southern District of New York. Layoffs at big media companies have been ongoing since the spring. But now, layoffs appear to be accelerating. What does it mean for the economy? And, what does it mean for the future of the United States? But, before we get into all of that, please press the like button and leave us a comment below. We would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. And, before we continue, a word from the sponsor of this video. Today's sponsor is InnerLife.com, creator of the InnerLife STS system. InnerLife STS is a cloud mobile platform for mental health care and its integration with primary medical care. InnerLife STS is designed for assessment, data collection and analytics, documentation, and progress tracking. InnerLife STS creates and composes conceptualized narratives and builds them into professional-grade reports. These reports are designed for use by mental health professionals, primary care physicians, justice system professionals and universities and include mental health assessment reports, mental health treatment reports, and treatment progress reports. And InnerLife STS uses doctor-selected pseudonames for all patients. So, only the doctor knows the patient identity. Vice Media is a multinational media company that was founded in 1994 as a Canadian magazine called Voice of Montreal. It has since evolved into a prominent global media brand known for its edgy, alternative, and often controversial content. Vice focuses on producing and distributing news, documentaries, feature films, and other forms of media across various platforms, including television, online, and print. Initially, Vice catered primarily to a countercultural audience, exploring topics and subcultures that were often overlooked or underrepresented by mainstream media. Over time, it expanded its coverage to include a broader range of subjects, such as politics, technology, arts, and entertainment, while maintaining its distinctive style and perspective. Vice gained significant popularity and acclaim for its immersive and engaging storytelling approach, combining investigative journalism, documentary filmmaking, and youth-oriented content. It has established a reputation for its bold and sometimes provocative reporting, tackling sensitive issues and challenging conventional narratives. Beyond its original magazine, Vice has diversified its media offerings, including the creation of various digital platforms, such as Vice.com, Vice News, and Vice Studios. It has also expanded its presence into television with the launch of the Viceland cable channel in partnership with A+E Networks. Over the years, Vice Media has grown into a global media empire, operating in more than 30 countries. It has collaborated with numerous high-profile figures, organizations, and brands, securing investments from major media companies and attracting a substantial online following. However, it's worth noting that Vice has faced criticism and controversy at times, including accusations of promoting sensationalism and cultural appropriation. Nonetheless, it remains a significant player in the media landscape, aiming to provide alternative perspectives and voices that resonate with younger audiences. Once a digital media darling, Vice Media Group on Monday filed for bankruptcy protection after years of financial troubles. A consortium of Vice's lenders, which includes Fortress Investment, Soros Fund Management and Monroe Capital, is looking to acquire the company following the filing. The digital media trailblazer, once valued at $5.7 billion and known for sites including Vice and Motherboard, had been restructuring and cutting jobs across its global news business over recent months. The group set to buy the company will provide $225 million in the form of a credit bid for most of Vice Media's assets, the company announced on Monday, along with significant liabilities. Vice is one of several digital media and technology firms forced to restructure this year amid a sluggish economy and weak advertising market. BuzzFeed last month shuttered its news division and announced substantial layoffs. Launched in Canada in 1994 as a fringe magazine, Vice expanded around the world with youth-focused content and a prominent social media presence. It endured several years of financial troubles, however, as tech giants such as Google and Meta vacuumed up global ad spend. To facilitate its sale, Vice filed for Chapter 11 bankruptcy in the U.S. Bankruptcy Court for the Southern District of New York. If the application is approved, other parties will be able to bid for the company. Credit bids enable creditors to swap secured debt for company assets rather than pay cash. The consortium's bid includes a commitment of $20 million in cash to enable Vice's operations to continue throughout the sale process. It is expected to conclude within 2 to 3 months, the company said. Vice said its various multi-platform media brands including Vice News, Vice TV, Pulse Films, Virtue, Refinery 29 and ID, will continue to operate, while its international entities and Vice TV's joint venture with A&E are not part of the Chapter 11 filing. Vice co-CEOs Bruce Dixon and Josefilo Quanwillas said in a statement that the sale process will strengthen the company and position Vice for long-term growth. We will have new ownership, a simplified capital structure and the ability to operate without the legacy liabilities that have been burdening our business, they added. One of Vice Media's biggest creditors is Hungarian-born American billionaire, George Soros. Soros is an investor, philanthropist, and political activist. He was born on August 12, 1930, in Budapest, Hungary. Soros is widely known for his successful investment strategies and his involvement in political and social causes. Soros made a fortune as a hedge fund manager and is considered one of the most successful investors in history. He founded his own hedge fund, Soros Fund Management, in 1970, which became known for its aggressive and high-risk investment approach. Soros gained international recognition in 1992 when he famously made $1 billion profit by short-selling the British pound during the European exchange rate mechanism crisis. Apart from his investment activities, Soros has been actively involved in political and social activism. He is known for his support of liberal and progressive causes, including democracy, human rights, and social justice. Soros has funded numerous organizations and initiatives aimed at promoting open societies, democratic governance, and civil rights. Through his philanthropic work, primarily carried out through the Open Society Foundations, OSF, Soros has supported a wide range of causes, including education, public health, media freedom, and criminal justice reform. The OSF operates in more than 120 countries and has provided substantial financial assistance to civil society groups and individuals advocating for social change. Soros's political involvement and financial contributions have made him a polarizing figure, attracting both admiration and criticism. Critics often accuse him of using his wealth and influence to manipulate political systems and promote his personal agenda. He has been the subject of numerous conspiracy theories and false claims, particularly from far-right and anti-Semitic groups. Fortress Investment Group LLC is another one of Vice Media's biggest creditors. Fortress Investment is a global investment management firm founded in 1998 by Wesley R. Edens, Rob Kaufman, and Randall Nardone. Fortress operates as a diversified investment company, engaging in various investment strategies across different asset classes. The company initially gained prominence by focusing on alternative investments, particularly in the private equity and hedge fund sectors. It managed funds that invested in distressed assets, real estate, and undervalued companies. Fortress played a significant role in the distressed debt market, acquiring distressed assets and companies at discounted prices and seeking to generate returns through restructuring, turnarounds, or asset sales. Over time, Fortress expanded its investment capabilities and diversified its offerings. It established specialized funds targeting infrastructure, real estate, credit, and other investment opportunities. The firm also entered into the world of permanent capital vehicles, such as real estate investment trusts, REITs, and publicly traded investment funds. In 2007, Fortress made history by becoming the first large private equity firm in the United States to go public, listing its shares on the New York Stock Exchange. This move brought increased visibility and scrutiny to the company in the broader private equity industry. In 2017, SoftBank Group Corp., a Japanese multinational conglomerate, acquired Fortress Investment Group for approximately $3.3 billion. Despite the acquisition, Fortress has continued to operate as an independent entity within the SoftBank umbrella, maintaining its investment strategies and operations. Today, Fortress Investment manages assets on behalf of institutional investors and private clients worldwide. Its investment portfolio encompasses a range of industries and sectors, including real estate, transportation, energy, infrastructure, and credit. The company's approach involves leveraging its expertise in identifying and capitalizing on investment opportunities that offer the potential for value creation and attractive returns. It's worth noting that since my knowledge cutoff is in September 2021, there may have been developments or changes in Fortress Investments' operations or ownership structure since then. If you follow this channel, you already know that the entire media space is experiencing huge numbers of layoffs right now. Disney began its second, larger wave of layoffs Monday. This round of layoffs brings the total job cuts in recent weeks to 4,000 when the latest round is completed. Earlier this year, Disney said it would slash 7,000 jobs from its workforce as part of a larger reorganization of the company that will see it cut costs by $5.5 billion. The announcement was made during Bob Iger's first earnings call since returning as CEO. Eliminating 7,000 jobs from its workforce equates to about 3% of the roughly 220,000 people Disney employed as of October 1st, according to a securities filing, with roughly 166,000 in the US and about 54,000 internationally. Disney notified employees of a first wave of layoffs on March 27. But, what do you think? Please leave us a comment below and hit the like button. We would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. Please share this video on social media. Thank you for watching.